Good morning, friends. Thank you for joining us today for our Q2 stimulus update, the latest on ERC, sometimes referred to as ERTC, PPP, and FFCRA paid leaves, all of our favorite acronyms. All of these programs just celebrated their 1-year anniversary. And we're still talking about them. For those of you who tuned in last Wednesday, this deck will look very familiar to you. It's essentially the same deck. We have a couple additional slides on sort of process pieces around iSolved for those of you who are our clients. But otherwise, as we often do here at Dominion Payroll, we recycle the same content because it's a lot, it's complicated. You might have missed it. You might not want to go back and listen to it on your own. You might want to be here for the live discussion. So we thought we would reprise last Wednesday's deck and go through this information again. If you have questions, we will be delighted to answer them. Please key those in using the Q&A section on your screen. Avoid the chat if you can. That way we can collect those questions after the fact. So please use the Q&A section of your screen. And you can key those in anytime. You don't have to wait until the end. As you know, sometimes we answer things in the moment. Sometimes we wait to the end. It'll be a surprise. So that said, we have a full house today. My name's Leslie Bruno. We also have Tracy Clark, Kevin Wilson, and Angie Trapp. And our first order of business will be to do a quick overview of what's called the Shuttered Venue Operators Grant. And my friend Kevin is going to tell us about that. Hi, Kevin.
Hey there, Leslie. How you doing this morning?
I'm well. How are you?
I'm doing great. And I'm excited to add some letters to our alphabet soup. We all know ERC and FFCRA, but now we've got SVOG.
SVOG, yes. Tell us about SVOG.
All right, so the Shuttered Venue Operators Grant. We'll go through this one pretty quickly. It's sort of got limited application for our clients and members of the community out there. But if you are, a theater or performing arts organization or a music venue, there's some money to be had out there, guys. So this it was established by Congress. It's been sort of a long time coming. And the SBA has been, admittedly sort of struggling to roll it out, but it goes live, I believe, at the end of this week. Eligible applicants, these are folks that are you're running a theater, a place where people congregate to see live entertainment. Some museums and aquariums qualify. And I would urge you to go to sba.gov and just look up Shuttered Venue Operators Grant if you're on the periphery of what might qualify. But applicants are going to be able to get a grant up to 45% of their gross revenue from prior to shutdowns. Maximum amount is going to be $10 million. $2 billion in this program is specifically set aside for small business applicants, and that's defined as folks who have 50 or fewer full-time employees. If you have received a second draw on your PPP loan, you received that after December 27th of this past year, your Shuttered Venue Operators Grant will be reduced by that amount. The idea here really is just to understand that, with local and statewide restrictions, a lot of these venues are not able to operate. And this is meant to be sort of a lifeline as we get more shots in arms, and hopefully everything starts to open up in a really normal feeling way. This will hopefully keep our cultural institutions and live music venues alive to the other side of this. There is sort of a tiered structure in terms of who the SBA is going to prioritize. I think it makes pretty good sense. The first tier is entities that have suffered a 90% or greater revenue loss. So, I mean, that's devastating. They certainly have probably laid people off, and the doors are locked. So folks with a 90% or greater revenue loss will be the first priority. That second tier is going to be folks who have 75% revenue loss. The third tier, and this is sort of the catch-all, will be folks with a 25% or greater revenue loss. Actually, I'm sorry, 45%. Sorry to misquote there. And then by and large, the money can be used for everything needed to run that business. So payroll, rent and mortgage, utility, if you have existing debt, insurance payments. Really, the only caveat here is you can't get this money and use it to, say, expand the business. You can't, acquire a new business or open a new location or, add a second bar to your music venue, things like that. So really, again, is sort of the bridge that is meant to help these entities get from here to there. So that is the Shuttered Venue Operators Grant in a bit of a whirlwind. Happy to answer any questions about it, but the SBA has a pretty clear and concise page, and I recommend that if you do fall into that category, go take a look there and let us know if you have any questions with regards to it. With that, I think that the microphone is going to get passed to my friend Tracy Clark.
Thank you. Good morning. How are you today, Kevin?
I'm hanging in there. How are you?
I'm hanging in there myself. It's a beautiful day and the weather is supposed to be amazing, getting up to 79. So I'm going to try to enjoy that while I can.
Absolutely. This is a good day to figure out how to work from a Adirondack chair or a porch swing.
There you go. I'm going to actually just enjoy the view of the parking lot here at the office.
Oh, that's such a lovely view too.
All right, so let's dive on into employee retention credit. So there are 3 acts that cover the employee retention credit. We have the CARES Act, which came into existence last April, the CAA, which came into existence December the 27th, and then ARPA, which came into existence on March 11th. The CARES Act kind of calls the shots on how the wages can be treated for ERC that were paid between March 13th through December 31st. The CAA called the shots for wages between January 1st and June 30th of 2021. And ARPA calls the shots on the wages paid between July 1st, 2021 and December 31st, 2021. The amount of credit that you can receive. So the CARES Act said that basically you can get 50% of qualified wages paid to an employee plus the cost to provide healthcare benefits to your employees. CAA became effective on January 1st, and that credit amount was increased to 70% of the qualified wages, which also included the cost to continue providing healthcare benefits. And then ARPA came along and just extended that same 70% credit for the qualified wages paid between July 1st and December 31st. So they just made that 70% credit available for the entire 2021 year. Okay, so eligibility requirements. For the CARES Act, it said that the wages were paid when business operations were either fully or partially suspended by COVID-19 lockdown order, or for any quarter in 2020 if you had gross receipts that are less than 50% of gross receipts for the same quarter in 2019. So as we go forward with this, you'll see that everything gets compared back to that same quarter in 2019. The CAA made effective on January 1st for wages paid when business operations were either fully or partially suspended, same thing as the CARES Act, by a COVID-19 lockdown order, or any quarter in 2021 if the gross receipts are less than 80% of the gross receipts as compared to the same quarter in 2019. So if you look at, they allowed you to actually look at either quarter 1 of 2021 as compared to quarter 1 of 2019, or you could do the preceding quarter, which would have been quarter 4 for, sorry, my Teams keeps going off, quarter 4 of 2020 as compared to quarter 4 of 2019. 2019. So that's what you could do your comparisons for to decide if you qualify for the first quarter of 2021. Now we're in second quarter now, so you would be looking at either quarter 2 for gross receipts as compared to quarter 2 of 2019, or you can look at quarter 1 of 2021 as compared to quarter 1 of 2019. Now, if you're shut or partially shut, you automatically qualify. You do need to understand that that qualification only works for the time period that you're actually partially shut. So in other words, if you're owner of a gym or a restaurant, they are still under a partial shutdown. They were for all of quarter 1, so they don't even need to look at their gross receipts. That qualifies them right off the bat. If you are in quarter 2, and let's say you're partially shut right now, but your respective governors lift that suspension or the lockdown order in the middle of the quarter, you would only be eligible up until that lockdown was lifted. So that's kind of how that part works, and the whole quarter is on the gross receipt decline. ARPA is the same as CAA, but it provided 2 changes. Let's see. Just go with it. I already explained that, so I'm actually pretty happy with how it went already. So we'll just go with what I just said on the CAA because it's the same for ARPA. Okay, maximum amount of credit. So for the CARES Act, the credit is capped at $5,000 for all qualified wages paid between March 13th and December 31st. And I should say, if you're going to use the partial or full shutdown as your qualifier, you don't actually start on March 13th. That qualifier would start whenever you were given that lockdown. So for restaurants and gyms, you want to look back and see what date that was. For a lot of people, that was like March, I think 23rd or something like that. So that's actually the date that the eligibility would start. And then you would look at wages paid, and you can get up to $5,000 per employee for the entire year from that March 13th or whenever you began to be eligible through the end of the year. For the CAA, the credit rate was the cap was lifted to $7,000 per quarter for qualified wages paid between January 1st and June 30th. So you just take, if you're going with the maximum, that would be $10,000 in qualified wages times 70%. That gives you the $7,000. Obviously, if you don't have employees that meet that $10,000, it's just going to be 70% of whatever they do earn. So if they got $5,000, you'd be getting $3,500 in that case. Actually, no, that's not right. Yeah, it is. That is right. $3,500. For ARPA, that just continues the same cap at that $7,000, which is really nice. So you could get up to $28,000 per employee for the entire year against their wages. It's a crazy amount of money to be getting back if you qualify for this. Okay, so there is some caveats to whether or not an employee is working. So if you have a company that has more than 100 full-time employees, then you can't get credit for wages that are paid to your employees that are actually performing services or actually working for you. So if you had people that you paid that were on a paid furlough, then you could get ERC credit. But if you have under 100 or under full-time employees, then all their wages are eligible. So how do you figure out if you have full-time employees? Well, what they decided was that anyone who worked 30 hours or more a week would be considered a full-time employee. So if you're a gym or you're a restaurant, you want to look at those people who actually only work 30 hours or more. That's how they determine the full-time employee threshold. Everybody's wages are going to be considered with the ERC credit. It's just that whether or not you're eligible for all the wages or only wages paid if they weren't working, that's based on that threshold of 100. When it came to the CAA, effective January 1st, the threshold was raised to 500 full-time employees. So that made a lot more people eligible for this because obviously 500 is 5 times what the amount was for the CARES Act. This just continues that ARPA also carried that 500 employee threshold. There's some more things here too, because there is some interesting things about a severely financially distressed employer, and that's somebody who had gross receipts that are less than 10% of the gross receipts for the same quarter in 2019. So these are people that you know, their business was pretty much just completely shut down, and it could be things like events like concert venues and things like that could qualify for this, but there is some play with that shuttered venue grant too. So you want to see what is the best situation for you to get the most amount of money for. But that is what ARPA included, was that severely financially distressed employer. Okay. ERC iSolved reporting. There's several reports in iSolved for ERC, but for those reports to populate, we have to enter a start date. So if you are like, gosh, I'm just wondering what my potential ERC could be, then you can give just drop us a line to customer service, or you can call in and ask for an ERC date to be entered. And once that start date is entered, then you can run a report for either 2020 or 2021 to see your potential ERC wage credits. You don't have to do anything with that knowledge. You know, you could, maybe you're not sure if you're qualified, but you want to see what you could potentially have if you did qualify. You know, if it's not a lot of money, then maybe you just don't even want to go down that road. But if it's substantial, at that point, you might want to reach out to your CPA or determine yourself if you're eligible for this. And I should say, is there one more slide on ERC after this?
Yes. Oh, maybe not. Sorry. They were
Let
just.
me see. Let me see that next slide. Okay, yeah, this is it. Okay, so for the Paycheck Protection Program, originally under the CARES Act, you could not get ERC and a PPP loan, but the CAA allowed PPP borrowers to be able to retroactively get the ERC credits. So if you did receive a PPP loan, if you're, you know, a business that qualifies under the CARES Act for ERC, but didn't apply for it because you had PPP, you now can go back, and you actually have until 2024 to apply for these credits. But I would go ahead and do it sooner rather than later. It does require amended 941s. So, you know, you might want to look, you might want to call us, have us put in a start date for that ERC, check out what your potential credits could be in 2020, and then decide then if you want to go through the process of having an amended 941. We'll actually do that for you. If you're a client of ours, we will file those amended 941s for you. ARPA is the same as CAA, but it also adds that the credit is not allowed for wages paid with the proceeds of the entertainment venue grants or the restaurant revitalization grants. So just remember that about ARPA. The CAA, again, if you got a PPP loan, let's say you got it on March 31st, you can still apply for ERC to from the 1st of January all the way through the 31st. So just until you pick up the PPP funds, you're still eligible to receive ERC credits.
Tracy, we have a question on ERC, if you don't mind.
Okay.
Okay, he says the employee retention credit is only for businesses that were required to be shut down because of government regulations, but continue to pay their employees.
So there's two qualifiers. So they could be shut down or partially shut down, or have a decline in gross receipts. Now for 2020, that decline in gross receipts was 50% or more. In 2021, it's a 20% decline or more. So those were the two caveats. If you have over the threshold of full-time employees, which in 2020 was 100, in 2021 is 500, and you continue to pay your employees, those wages are available to be qualified for ERC. If you have under 100 full-time employees or 500 full-time employees in 2021, then all wages are eligible for ERC.
Okay.
That answer that?
Yes, and then Mike says, which DP reports are available to support applying for PPP2 loan forgiveness?
I have that coming up.
Which I think is on the next slide, right? So
Yeah,
Mike,
yeah.
you predicted you. Thanks for that segue.
Okay.
Appreciate it.
All right. So PPP2 was extended. Now you have until June 30th to apply for PPP2. And then I think my next slide has what you can do with in iSolved. Yep. Okay. So we now have the CARES PPP Loan Forgiveness Report 2021. So once you receive that second PPP loan, you can let customer service know, and we'll enter in the disbursement date for you. And then after the disbursement date has been entered, that CARES report will populate. I did highlight a couple of things. You will have to pick the loan year. It should default to the 2021, but I can't swear to that. So just make sure that it's on 2021 PPP loan. And then you will have to specify the last day of your covered period. Why is that in there? Well, what they came up with was that you would be able to determine the length of the loan period. If you don't need the whole 24 weeks, you don't have to go the whole 24 weeks. So you can decide how much time you do want to use for your covered period. So you'll enter that value in there. And then the owner's compensation used in the loan application, just put in 2019 if you were a company that was in existence in 2019, or if you used your 2020 data, then that is available there. And don't forget to change the format to Excel. All right. If you're applying for a PPP loan, you haven't had a chance to do that yet, but now you're like, okay, that's been extended. So I'm going to go ahead and try to apply for a PPP2. Go to client reports, put in the search bar CARES, and hit the CARES Paycheck Protection Program report. What you're going to see is you have a lot of filtering over on that right hand side. You're going to have to put a from date and a to date. You'll pick either 2019 or you'll pick 2020. You want to pick the one that's going to have the greatest amount of payroll for you. So for most borrowers, that's going to be the 2019, but it doesn't have to be. So that's your choice. And then down on options, the 100K excess cost option, you want to put compensation only. There is a drop down there for other things, but go ahead and put in that compensation only. And then again, make sure the format is in Excel. Leave everything else as a default. You can change the legal company if you have more than one. And then on that grouping, a lot of people want to check that pay group breakdown, but really when you apply for these loans and also when you apply for your forgiveness, you need to leave everything together so that you're getting one schedule, one table one table two, that it's not all broken down, because your lender is not going to be looking at it in partial like that. So what you're going to do is you want it to be all together for one company. I think that's it for me.
Mike says, I assume you can exclude employers' pay from the forgiveness report.
It's going to appear on line 9 like it did on the first one. So we have to, as an owner, and then you'll appear on line 9. Are you wanting to exclude it, like make it a 0? Let's see.
Not part
of forgiveness. So if you're in the system as an owner, your pay is going to appear on line 9. If you want to remove that, you'll just have to do that manually.
Okay, and Brittany asks, have you heard any more about the timing for 2020 ERTC refunds?
Have not a single word.
Okay, would that be IRS? Is that what we're looking at?
Yes. Yeah, that's not on us. That's IRS.
Okay. Mike says, I can read your minds after all this time. I'm not surprised. Scary, but true.
Yeah.
All right. Well, thank you, Tracy.
No problem.
And as you guys all are aware, we'll have these slides posted on our website on the COVID page, hopefully by the close of business. Sometimes we don't quite make that deadline, but we try. So that's the goal, is to have it up there by 5 o'clock today. Before I dive into paid leaves, I'm going to give a quick shout out to looks like our members of our Texas team are listening today. Cecilia and Callie and Araceli. Thanks for tuning in, ladies. Hope things are well down there. All right, so ARPA, which was passed last month, has some pretty significant changes to paid leaves, and we're going to dive through these now. And you're going to notice the look and feel of the back half of this deck is different because we all designed these separately and then mash them together. So we're going to it's going to change here in just a second if you want to go to the next slide. So just adjust your eyes to this different background. But the FFCRA paid leaves continue in the American Rescue Plan Act, or ARPA. They have extended that tax credit for you guys through September 30th. They're not mandated like they were in 2020, but it's definitely a viable option if you have employees who should be out of the office or need to be out of the office due to COVID, the pandemic. The virus is still around. We're not done yet. And this act is acknowledging that and saying, you know what, we're going to try and bridge this gap. And we've selected September 30th as the estimated time when we will no longer need these paid leaves. Although I will say some states have already passed their own paid leave plans. And then it's definitely a conversation at the federal level as well. But for now, this is what we have. So if we want to go to the next slide, just a quick reminder that you all as business owners and leadership have a responsibility to follow OSHA's general duty clause, which states that you must provide a safe and healthful workplace that is free from serious recognized hazards. COVID-19 is a serious recognized hazard. So these leaves help you too. By allowing you a way to keep people away from people and have the government pay for it up to a certain amount. And we'll talk about that in a second. So it's not, these are still tools for you guys, and it's still beneficial for you, not just the employee, but for all of your staff and customers and partners to keep sick people home or potentially sick people home. And we'll talk about this in a minute, but the new leaves also cover vaccines. So if an employee wants to get a vaccine during business hours, you can code it as FFCRA leaves and the government will pay for it. If the employee gets the vaccine and doesn't feel well afterwards for a day or two, let them stay home, the government will pay for it. So that's another big difference, which we'll talk about in a second. If you want to go to the next slide. All right, so just a quick summary of what's going on with these. Like I said, April 1st to September 30th of this year. They are not federally mandated as they were in 2020, but you should be consistent. If you're going to offer it to somebody, then you should offer it to everybody. I've had a couple questions that I don't know the answer to. I'm still faithfully refreshing the DOL and the IRS web pages every day to look for updated guidance. I don't see it yet, but I've had some clients ask if you can determine as a leadership team that you will offer these until June 30th or July 31st and not all the way till September 30th, or can you offer just the emergency paid sick leave and not AFMLA? I really don't know how to answer those. I would think that if you're going to offer it, like if you're picking June 30th as sort of this arbitrary date when you think that that your business will no longer need these leaves, I don't know if I would publicize that. I think, you might have somebody who has an issue in July, and then all of a sudden you're going to be in this weird position of having to make an exception to your own rule. So I think maybe you could word it as, you could communicate to your employees now that we are aware of these paid leaves. Here are the qualifying reasons. Here is the request form, which, by the way, is located on our website, the Dominion Payroll's COVID website. You're welcome to download it. That form doesn't go anywhere. You just keep it. Everybody keeps a signed copy, and you keep it in their personnel file for 6 years. And then go from there. If you don't want to honor these leaves, you don't have to, but make sure you're consistent. It still applies to employers with 500 or fewer employees, so that's the same. And then it also applies to all of your employees, full-time, part-time, and seasonal. Their bank of hours reset as of last week, and I'll explain what that means in a second. But that's another major change that ARPA made, is that sort of erases everybody's balance. If they used leave in 2020 or early 2021, doesn't matter. Everybody gets reset back to the same amount, at least for emergency paid sick leave. So if we go to the next slide. Okay, like I said, there are some things that stay the same. The employee count is the same at 500. You should continue health benefits during paid leaves and just arrange for if you need any sort of, arrangements with the employee about paying the premium. It should be work as normal, but in any case, benefits should continue. You shouldn't discriminate or otherwise retaliate against employees who take paid leave. Those tax credits occur in real time via the payroll process. You would just code those hours as a separate earnings code that we would need to set up for you. And then the tax credits would happen once the payroll is run, and they would come back to you. There is a cap of either $200 a day or $511 a day, depending on the qualifying reason. We'll talk more about that in a minute. For EFMLA, the maximum amount of the tax credit is $200 per day. So that's 2/3 of the regular rate of pay, up to $200. So that would be a little bit of a pay cut for many employees, but still it's better than nothing if they need to take that time out. And then you're encouraged to allow employees to use this before they burn through their PTO. And actually that makes sense for you too, because you're not going to be paying for the time out. Now the next slide is what has changed. All right, so I'm going to try and explain this as clearly as possible. I know it's a lot of information, but emergency paid sick leave, or EPSL, or e-sick, as some people refer to it, that's what we originally was 2 weeks or 80 hours, or up to 80 hours of leave for 6 different qualifying reasons. And they were all pretty much focused on having the illness, having the virus, thinking that you might have it, getting tested, taking care of someone. And that was up to 80 hours. And then the other piece of the paid leave from FFCRA was EFMLA, which we'll talk about in a second. But EPSL was put in place really just to keep people out of the office if they could have any chance of spreading it. Now they're adding vaccine reasons to that too. So like I mentioned, you can now use these leaves to pay for someone who wants to go get the vaccine during business hours or recover from any side effects. The law actually now explicitly states that employees can take EPSL when seeking or waiting for a COVID-19 diagnosis or test result if they've been exposed to COVID-19, or if you as the employer has asked them to get a diagnosis or test. It didn't explicitly say that before, but a lot of people use it for that reason anyway, which I think it was just an oversight that they didn't put the actual language in there way back a year ago when they wrote the law, because they just didn't know how it was going to play out. All right, so this third bullet is important. All employees are now eligible for a new bank of leave as of April 1st, which was last week. Full-time employees who work 40 hours a week are entitled to up to 80 hours. Part-time employees get a prorated amount based on the average number of hours that they would work over a 2-week period. You can't provide EPSL in a manner that favors highly compensated employees or full-time employees, or that discriminates based on how long employees have worked for the employer. So if you're going to offer it to Tracy, who's been with us for 10 years, and Kevin, who's been with us for 1 day, that you have to do it that way. You can't just say Tracy gets it and Kevin doesn't because he hasn't worked here long enough. And again, remember, the whole point is to make sure that you are fulfilling that general duty clause, which is to keep your workplace free from injury or illness. So these are leaves that can help you accomplish that. Okay, the EFMLA, if you'll recall from the original legislation, it was 12 weeks of leave paid at 2/3 of the rate of pay, only for the child care reason number 5, which states that you qualify if you have a child at home because their daycare or school is closed due to COVID. Now, and also it was 12 weeks, but the first 2 weeks were unpaid. So a lot of people would layer over the EPSL 2 weeks over top of those first 2 weeks of EFMLA. They would run concurrently, and then the 10 weeks of paid EFMLA would kick in. Now, not only can you use EFMLA for any of the same reasons that EPSL can be used, including vaccine, but that 10-day unpaid waiting period has been eliminated. So now someone could conceivably take up to 12 full weeks of EFMLA, tack on the 2 weeks of EPSL, and you've got a 14-week consideration. Now, I think that what happened is that the stripped down version of FFCRA stripped out all of those COVID-19 illness related reasons for taking EFMLA and just did childcare, which was a legitimate reason. But then they didn't take into account that, yes, 2 weeks seems to be the magic period for people who needing to be quarantined, but that's not always enough. Or people can have different, they might take EPSL for one reason, and then they burn through it, and then all of a sudden they need more time for whatever reason, something else comes up, COVID related, and they just didn't have enough. And so the recourse was for them to use their own PTO, which you pay for, or take unpaid leave, which isn't great. Some people left their jobs. I mean, a variety of things happen in this regard. So my working theory is that they're trying to put this in place so that there's that, if the first 2 weeks weren't enough, then here you don't have to use the full 12 weeks, but there is a bank of time that you can take to get yourself or your family members healthy again, particularly if you're a long hauler. The other thing is that many schools are still closed or have hybrid situations. So parents might need to take EFMLA for the original reason, which was for the child care reason. The maximum reimbursable tax credit increases to $12,000 from $10,000, which works out to about $200 a day. Now, what I'm a little fuzzy on, I definitely know that the EPSL bank of up to 80 hours reset for everybody last April. I'm not sure about people who have taken EFMLA before, if they're entitled to a new 12-week bank. I know that if for EPSL, it doesn't matter what they've taken before. Everybody just resets. But for EFMLA, I'm not sure, because in the original law, you couldn't take EFMLA even if you'd taken regular FMLA at some point, which seems silly to me. But so I'm still, dutifully refreshing the FAQ page on the Department of Labor site so that I can figure out what to tell people. For now, the way that I read the law, it seems to me that everybody they reset to 2 weeks worth of paid leave for emergency paid sick leave and 12 weeks for EFMLA. I don't want to misspeak, but that's the way I'm interpreting it. So I'm going to continue to just research and try and figure out what the real answer is. But I don't see anything in the law that says that people don't get a new bank. So stay tuned for that. All right, next slide. And again, on the EFMLA piece of the legislation explicitly says that you can't provide EFMLA in a manner that favors highly compensated employees or full-time employees, or that is based on how long employees have worked for the employer. Again, be aware that any inconsistencies in the granting of leave could potentially lead to a discrimination claim. And the law actually says this is not interpretation, it actually says it in the law. So they're taking that very seriously. I think probably some lessons were learned last year, and they're trying to mitigate that now. And then you should allow employees to use EFMLA before using PTO. And again, that benefits everybody because you're not paying for those EFMLA wages. All right, so we're getting into what everyone wants to see, which is the qualifying reasons for using EPSL and EFMLA. And again, starting last week, the reasons are now all the same. Before, it was 6 reasons for EPSL and 1 reason for EFMLA. Now it's just 5 reasons for both, which is really helpful for those of us who are trying to figure out what all this means. So if we go to the next slide, we can see, whoops, there we go. The first 3 reasons you can sort of, it's kind of handy to think of those as the self-care reasons. So reasons 1, 2, and 3 are really focused on you, or excuse me, the employee or their family members getting sick or experiencing symptoms. It also now includes vaccination and recovering from any related illness from any side effects. So if you're under a federal, state, or local quarantine, if your doctor asked you to quarantine, if you have symptoms or seeking a test, seeking a diagnosis, getting a vaccine, these first three reasons are really focused around sick individuals, sick employees, and out of an abundance of caution, as soon as that employee feels sick or calls you and says, I don't feel well, they would probably fall under one of these three reasons. The next slide has reasons 4 and 5, which is more about caring for someone else. And so you'll see there, number 4, you're caring for another person. So maybe you have someone in your household who needs you. And then you need to go ahead and stay with them, not only to take care of them, but to make sure that just keep you out of the office so that you don't get anybody sick. And then number 5 is not necessarily if an employee is sick, it's more about they have a child at home and they can't leave that child by him or herself. So, and we'll talk about this in a second, but those last two reasons, 4 and 5, would only be 2/3 of the regular rate of pay, whereas those first 3 self-care reasons are 100% rate of pay. So usually you want to exhaust emergency paid sick leave first because it has a higher tax. I'm sorry, I misspoke. I'm still getting used to this law. All right, so the first 3 reasons are 100% rate of pay. The last 2 are 2/3 rate of pay. When using emergency paid sick leave, if they're using EFMLA for any of these reasons, it's just 2/3 the regular rate of pay. I'll go through that again in a second. I don't know why they did it that way, but they did it that way. So you'd want to use EPSL first, since it has a higher tax credit for those first 3 reasons at 100% rate of pay, as opposed to 2/3 the rate of pay, which is reasons 4 and 5 for EPSL, and for any of the reasons when used for EFMLA. I probably just made that way more confusing, but in any case, submit a question if you need to. And then on the next slide, I think we go through the tax credits, and then I think I'm done after that. Okay, so here's how the tax credits work. And remember, it doesn't matter anymore what they used or didn't use before April 1st, 2021. So you don't have to worry about doing any calculations there. Okay, so the credit available for emergency paid sick leave when used for reasons 1, 2, or 3, those self-care reasons, is 100% of an employee's regular pay with a limit of $511 per day. The credit available for emergency paid sick leave when used for reasons 4 or 5, which is largely centered around caring for another person, is up to 2/3 of an employee's regular rate of pay with a limit of $200 per day. And I say up to in that sense only because there's a cap. You don't get to pick. It's 2/3 of their regular rate of pay, but capped out if that person is compensated higher than that $200 per day cap. Now, for EFMLA, for any reason, any of those 5 reasons, is up to 2/3 of an employee's regular pay with a limit of $200 per day and a total cap of $12,000 per employee for that full 12-week run. So we're looking at a potential of 14 weeks. If somebody needs it, they can take it. And I'll mention this also, is that they can take it intermittently. Now, of course, if they're sick or they've been exposed, intermittent should not be an option. They should just stay home until they are safe to return to work. But if you've got, usually the intermittent use is for that reason number 5, which is for childcare, because you've got, kids who are going to regular school Monday, Wednesday, Friday, and then they're home Tuesdays and Thursdays, or maybe they're home full time, but there's another parent or adult present, and your employee can sort of divide up their time. You can slice and dice EFMLA leave right down to the hour. You would have to make sure those hours are coded properly in the system, though, before running payroll, so you can get the tax credits for those hours. So that's definitely an option. You can work something out with your employee and then see if it works out, great. If not, you can adjust. And it's all up to your, whoever is on your team running payroll. They'll just need to make sure that they code those hours correctly. Okay, I think that's the end of my slides. Yep. And I see that we have some questions.
Leslie, would you like me to handle asking the questions and you and Tracy can be our expert voices in the room?
Yes, we will try.
Okay, I'm putting a lot on your shoulders here.
Well, thank you.
All right, so we have an anonymous question or questioner asking, if an employee takes leave due to COVID-19 qualifying reasons, but does not ask for paid leave, do we as an employer have to remind the employee and process the paid leave on payroll?
No, you're not mandated. The leave's not mandated. In other words, they're not entitled to it. It's at your discretion. I mean, it depends on the situation, but if they don't ask for it, because they might not know about it, and then they just think they need to take their regular PTO that they've accrued on your plan, I think it would make sense for you to pay them using the FFCRA paid leave because you don't have to pay for it. So, I mean, the answer to your question is no, but I would consider it because why not? And once it takes a little bit of setup on our end, but once we get those earning codes set up and answer some questions, get some questions answered, then you would pay them for that time away using the government's money. So I think that's a win-win.
Yeah, I think like with so many things during this past year, there's what's required by the law, and then there's sort of the best practice recommendation.
Right. We're all sort of in the middle of just trying to figure out that equation.
Right. All right, let's see. Kathy says, if you decide to comply with the extension, can you pay for only e-sick, or do we have to cover vaccine recovery time or time off to get the vaccine? We are concerned about people taking advantage of the vaccine portion.
Yeah, I hear you, Kathy. And just like with when we originally rolled these leaves out and we did have some bad apples out there or suspected bad apples who were abusing I've been exposed, I can't work, I need to get a test, I need to take some time off. It could potentially happen with vaccine too. And I've had this question before, and it's tough because you should, if you're going to use it for any reason, you should use it for all of the reasons in my mind. I haven't seen guidance that says otherwise, but to me, I would think that would be the fairest way to do it. To the best of your ability, I would try to work with the employee on, or communicate with your employees and say, if you plan to get a vaccine during work hours, please indicate, your estimated number of hours you're going to need. You could ask them for, more details than that if you want, like, where are you going? And then be like, okay, so then you need to ask for that time off in the system, and then we'll code it appropriately. If they call the next morning and say, I got the shot, I don't feel well, which does happen, I think it's probably just safest to let them stay home for a day. If they can work from home, that's great. You don't have to code them as taking any leave. If they feel lousy but are able to work from home, that's fine. Pay them like normal. But if they can't work because they're not feeling well, I would just say give them the day off and pay for it with these leaves. And if some people take advantage of it, if it gets to be like an extended reaction time that you think is unreasonable, maybe you can ask them for a doctor's note. And if I hear anything more from the government, I'll let you know, Kathy, because I know it's tricky.
All right. Anonymous says, is paid sick leave for vaccination reasons paid at 100% of regular rate of pay?
It sure is. Vaccination reasons are 100%. So for instance, I got my second shot on Saturday. I didn't feel great on Monday. I was able to work though, because I work from home. But if I had a job where that wasn't possible, I don't know that I would have been able to perform it very well. And then I feel fine today. So it was just one day, and you would pay them at 100% regular rate of pay. And the end, that's it. It's a lot shorter than if they ever actually get sick or have to wait for the results of a test. So my anecdotal evidence is that most people just need a day if they need it at all, and then you're done.
All right. Another anonymous attendee is curious if the IRS 7200 form to get the sick leave credits is not filed at the end of the quarter with the 941, will the IRS still accept the form later, or do you lose the credits because the form is late?
You don't need to fill out that form 7200. It's going to roll right onto your 941 and they'll issue you a credit, or actually they'll issue you a refund on those credits. So no need to fill out the 7200. Just go ahead and just let it roll onto the 941s.
All right. Our friend Mike says, sorry if I missed this, but are EPSL and or EFMLA mandatory?
They used to be, Mike, but they're not now. So it's up to you. The big takeaway is if you're going to offer it to everybody. If you're not going to offer it, don't offer it to anybody.
And right in line with that question, may an employer opt to only offer EPSL but not EFMLA?
So that's another question I've been getting. In addition to the can we offer it, can we impose our own sort of end date? I don't know. I've been looking for an answer to that question. I've heard some various interpretations among us HR nerds, and I don't know. If I were faced with like maybe a COVID long hauler, certainly for the sick reasons, I don't see any reason why you wouldn't, if they need more than two weeks because they're sick or they've been exposed. I mean, I would make it as easy as possible for them to not come into the office. And I know that you have a business to run and there are definitely some continuity reasons there, and I get that. But it just makes more sense to me to do that, to keep people home. And if you can have the government pay for all or part of it, then why not? Now, if they can work from home, again, you don't have to offer any of this. You just have them work from home and they're good to go. Just pay them normally. For the childcare reason, that's a tricky one. That's near and dear to my heart because I have a child in school, and it's definitely, I can't work when she's here. It just doesn't happen. But that's highly situational. And if that's the case, I would, usually parents they know, at least they have, at least they know what the school district is planning to do, at least for the foreseeable future. Sometimes things change mid-semester, of course, but you could plan more for that EFMLA, that childcare reason, and like work something out with your employee. And I think that would be the right thing to do. And trust them when they say that they can't work when their kids are at home, because it's not going to do you any good if they're only half paying attention and half focused. So hopefully you can work that out with them. And maybe there's an intermittent option you can work out so that they work some hours regular and then some hours are on EFMLA.
All right, Julie asks, so if our employee was out sick due to side effects from the vaccine on March 30th and 31st, we can't take advantage of the FFCRA or ARPA because it was before April 1st, or can we?
You can, Julie. And I actually, right before we started the webinar today, I was looking at your ticket, and I'm sorry that it took us a day to get back to you, but you can go back and take advantage of the FFCRA. It was still in place before April 1st. So, and particularly for this reason that you're talking about, this out sick due to side effects from the vaccine. Oh, actually, you know what? I'm sorry, I misspoke. Side effects from the vaccine. Sorry, I read that as COVID-related side effects. No, it wasn't available for the vaccine on March 30th and 31st. Sorry about that. It's only as of April 1st, that's the deadline that the law has. So no, you couldn't do it for vaccines for that reason. If the employee if you had a sick employee, we could retroactively do it for you, but not for the vaccine. Sorry about that.
See, Mike comments, once vaccinated, COVID exposure does not require quarantine.
Right. Well, so the CDC says that once you're vaccinated, you still need to wait 2 weeks before you go around hugging people or pretending that everything's fine. So no, but yes, you're right. So if you get past that 2-week mark and you think you've been exposed, you don't need to quarantine. But there still are guidelines out there. And so, masks and social distancing are still recommended. So let's not lose sight of that. There are some variants out there. So as we all move through, and then there are people who are who won't get vaccinated. So, it's still kind of a tricky thing to navigate. But yeah, I mean, essentially, if you have the vaccine and it's been 2 weeks after your second shot or your one and only Johnson & Johnson shot, then you should be able to, theoretically, hopefully, fingers crossed, not contract the virus.
All right. Kim asks, what Dominion payroll code should be used for vaccine-related absences? E-sick?
So Kim, because the taxability of these leaves changed as of April 1st, unfortunately, we have to set up brand new codes for every client who wants to take advantage of this. You can't use the old ones from prior to April 1st. So if you decide to participate in this program, email customer service at dominionpayroll.com and say, I'd like to set up FFCRA codes, and they'll reach back out to you with a couple questions and get those set up for you. And they'll do 2 separate ones, eSIC and eFMLA, but it'll be like it'll be the ARPA version and not the pre-ARPA version.
All right, looks like the last question here in the Q&A. Anonymous says, kind of confused with a smiley face, which I think has sort of been my take on everything this year.
Oh, gosh.
Anonymous says, so will FMLA paperwork need to be filled out for all 5 reasons?
So Anonymous, that's a great question. So if you guys are familiar with sort of classic FMLA, like the law that's been in place since 1994, I think, that allows for job protected unpaid leave for 12 weeks. This is typically used for maternity leave, paternity leave, long extended illnesses, things like that. There is some paperwork that you fill out and just keep on file, and that's issued by the Department of Labor. In this case, for eFMLA, there's no official paperwork, but documentation is something that is recommended when possible, because just in case the IRS gets a wild hair and comes back to audit any of us for these tax credits, they think something's suspicious, like maybe a company abused it or something. It would be in your best interest to have some sort of documentation that your employee has signed and you've signed and everybody has a copy. And so it's not required, but I just feel like it would be a best practice. If you go onto our website on the COVID-19 page, on the forms and information page, there's a form that's been updated to include all of the new reasons, the vaccine reason, the recovering from the vaccine, and then all of the legacy reasons that have carried through that now apply to eFMLA. So I hope that answers your question. You don't have to do it, but I think it's the right thing to do just to have on file. And also just for your own sort of internal processes to make things more formalized so that employees actually, that could help with weeding out the people who might be abusing it, because they're going to see that form and they're going to see that signature line and be like, oh, okay, well, this seems real. This seems more formal than me just being like, you know what, I'm going to stay home today. I don't feel well. They actually have to kind of certify and sign. I mean, it's not a legally binding document, no, but it's something. So if you have trouble finding that form, just email us at questions@dominionpayroll.com, or if you could download the form and don't understand, just let us know.
All right, one more question's come in. Mike asks, back to the OSHA requirement to keep your work environment safe, including virus exposure, does that allow for mandatory employee vaccination?
Well, Mike, I don't know. The term allows is a tricky one in this sense. I mean, I could do a whole webinar and have on the vaccination on mandatory versus discretionary. It allows for mandatory employee vaccination to be the case. Yes, the EEOC actually has weighed in and said If you as an employer would like to require the vaccine as a condition of employment, you can do that. However, you need to allow for accommodations if there are bona fide reasons for people not wanting to get the vaccine, like if they have a doctor's note, pre-existing condition, or have a religious objection. And we have those forms on our website as well. We also have sample policies on our website for mandatory and discretionary vaccination policies. It's just the mandatory one is a bit more risky because then we just don't know there's no precedent for this in modern times. So we're just not really sure what is going to happen. There have been a couple of lawsuits where the employee said, no, not only do I not want to get the vaccine, but I'm going to take you to court over it because of, various reasons. So, I want to protect you guys by making sure that you have considered all the risks and considerations of a mandatory versus a discretionary. I did a vaccination webinar, 2 weeks ago now, maybe, which would be on our website, hopefully. I'll probably do one again next week. So next Wednesday, tune in for that.
All right, let's see. Kim says, the form you were just talking about, is there a line pertaining to just the vaccine-related absences? What is the name of the form to download?
Let's see. Give me 1 second and I will answer that. You'd think I would know off the top of my head after a year of this, but not always the case. All right, so on our webpage, dominionpayroll.com, top of the page, click on the COVID-19 bar, then click on Forms and Info. And you'll see probably about the last two things. Second to last is FFCRA paid leaves. And there's a link to the emergency paid sick leave and emergency FMLA request form, which has that third box on there. It's reason number 3, mentions vaccination and side effects. So the person would fill this out, check that box, send it to you, sign it, send it to you. And then you would each keep a copy and go from there. So hopefully that answers your question. If you can't find it, let us know.
All right. Kim says, perfect, thank you. You're very welcome, Kim. And that takes us just past the noon hour. Anybody have anything that they want to tease out there?
You have something tomorrow, right, Kevin?
I do. And honestly, I didn't say that in I wasn't leading the horse to water on that one at all. I
was like, is that my cue to ask me about?
Well, thank you for the reminder. Tomorrow at 11, we are bringing you another in our ongoing series of The Beacon. We're going to be looking at brick and mortar establishments and lessons learned from the last year of operations and the path forward. We have representatives from Salsa Rita's Fresh Mexican Grill. The CFO will be joining us, Tim Carter. Dave Gallagher, a name familiar around these parts, is both the CEO of Dominion Payroll, but also the co-founder of Tang and Biscuit Social Club. And last but not least, we have Jeff Van Horn from Lucky Road Run Shop, or Road Shop rather, to talk about all the lessons, the pressures from online retail, third-party delivery and payment apps, hiring in, here towards the end or beginning of the end of the pandemic, I suppose. So it should be a great conversation. You can go to dominionpayroll.com and hit that resource button at the top of the homepage, and it'll take you to where you can register. I do hope you'll join us. That is tomorrow at 11. All right, if there aren't any other questions, Tracy and Leslie, it was lovely speaking with you today. I hope you all have a great Tuesday.
You too, Kevin. Enjoy this beautiful weather.
Absolutely.
Yeah, it is really nice out. Bye, guys.
Bye, guys.
Bye.